All right. Hi, everyone. My name is Ruth, and I'm a part of the content team here at Simple Practice. We're so grateful for you all to have been able to join us in our Taxes in Private Practice webinar. We're joined today by accounting expert and therapist Edie Gardner, who's just super knowledgeable, and we love to have her every time for this series of Ask an Accountant. So she'll introduce herself in a second. But for now, let's get into a few housekeeping items. So disclaimer, Simple Practice does not provide insurance, billing, or legal advice. The views and opinions expressed by the presenter are not those of or endorsed by Simple Practice or its affiliates. As a reminder, we get this question a lot, but all attendees will be emailed a recording of this webinar and a copy of the slide deck. So if you miss anything, don't worry. You will get an email shortly from us, likely tomorrow. You can watch all of our webinars on our YouTube page, including this one once the pre-recorded one or the recorded one is uploaded to YouTube tomorrow. So you can find all of them at youtube.com/SimplePractice and /videos. And if you have any questions about your account and you're a Simple Practice customer, we'd encourage you to go to support.simplepractice.com to find, help center guides, as well as to be able to reach out and connect to a team member, one of our team members, for help. So if you notice to the right of the slide presentation during this webinar, you'll see a chat box. Many of you have already been making great use of this. It's a good place for you all to discuss the content with each other. Also a good place to report any technical issues you may be having. Myself and my colleague Cheyenne will be monitoring the chat. So if you have any technical issues, be sure to put it in there. Over next to the chat box, you'll see the second tab titled Docs, where you'll find links to our YouTube page, where there's the recordings of the past webinars, as I mentioned, and also a guide on how to get help from our team. There's also a link to Edie's website, which has a bunch of really amazing information about accounting for private practice and for clinicians. So be sure to check that out when you can. As I mentioned before, we're gonna try and answer as many live questions. So to the next tab, if you look, you'll see the Q&A tab, and that is where you can ask any questions. So if you have any questions that you'd like Edie to answer at the end of the webinar, please go ahead and ask them there. We're going to answer as many of them as we can at the very end, so please stay tuned. And now I'll turn it over to Edie.
Thank you, Ruth. All right, welcome everybody. We are going to be talking about taxes in our private practice. And it was really important for Simple Practice and for myself that we provided this in February. So it's the last day, it's leap year, leap day of February. So hopefully this will be enough time for you to get some information in order to file a tax return. Those of you who aren't familiar with me, I am a licensed clinical social worker. I have my own private practice in counseling. I've had that for a number of years, since 2017. But I started out as a CPA, and so I have this side gig of helping therapists manage the books of their business. And I also want to really just highlight how grateful as a therapist I am that Simple Practice supports offering accounting packages, accounting help, accounting information and support, because almost every business support program that I hear advertised out on social media acts like they're fully comprehensive, that they offer all business support. But really what it usually ends up being is almost 100% about marketing. Now, marketing is exceptionally important in a private practice, but it's very rare to find programs that highlight accounting support. So I just want to really give another shout out to Simple Practice, because it's really admirable what they're offering. All right, let's talk taxes. This is my third year of collaborating with SimplePractice on offering webinars, and this is my third tax year talk about taxes. And each tax talk, and Ruth already explained how you can access those videos that I've done before, but each tax talk is just slightly different. So today there's going to be one main word, and that main word is simple. I'm going to really break it down into simplicity. And today I'm also going to be focusing in on, okay, so this is what you do with your tax return, but how do you also get those numbers, and how do you figure out the numbers to put onto that tax return? Okay, so I'm going to try and focus on that as well. I've reviewed your questions, so I may suggest that you might want to wait just a moment to submit those questions, because I may be tackling them in this first part of the presentation, and then before we go to the live. So success really can be very simple. So a simple tax return does not mean that you're missing out on deductions, but I hear that a lot, or I hear that underlying thought. I just want to say that I love SimplePractice's name, because the very first word says that simple is best, and the second word explains that we are all practicing to just keep getting better and better. So this can be complicated stuff, but we're going to work on making it easier for you. So something to consider. So increased deductions means that your business expenses are also increased, which means that you have less money available for your personal finances. So I want to really plant the seed to really avoid trying to chase deductions. Okay, I don't want your focus to be on making sure that we try and find fancier and fancier ways of getting deductions. Now, I don't want you to pay any more in taxes than you are supposed to pay, okay? But I also don't want you to be spending money in your business just because you're trying to chase some deductions. So, by way of an example, you would never lower your hourly rate in order that Stripe charges less in processing fees. So in other words, you would never lower your hourly rate from $200 to $150 because you want Stripe to charge less, because it's a percentage in processing fees. But it's almost the same thing as spending $1,000 on a business expense that you don't truly need in order to save $400 in taxes. Okay, so I want therapists super hyper focused on having financially thriving businesses, because that means you're helping more people for a longer period of time. I want you to be playing the long game and really focused in on spending more money in your business that you don't actually need is going to prevent you from playing the long game. All right, so in the interest of time, I'm not going to play this little game where I'm going to look and see what your answers might be. But in my theme of keeping this simple, what provides the greatest deduction? And it's just one word. And so I would love to know what your guesses might be. Well, okay, let me just take a moment. If people want to just in that chat, I'm going to go over to the chat box. Just try and see what you think that one word might be. What might provide the greatest deduction? Okay, I've got rent, insurance, contractors, office space, salary, saving. So you're kind of close when you're saying saving. So the thing that provides the greatest deduction is retirement. As a business owner, and it doesn't matter how small your business is, if you are receiving income, if you are doing any kind of counseling or whatever service you're providing in this helping profession, if you are getting any income, you have a business. And as a business owner, you are entitled to have a retirement plan. You can have, depending on the plan that you have, significant savings in this year. In 2024, you could have significant savings on your tax return from your income taxes, not on your state taxes and not on your payroll taxes, but on your income taxes. You could have significant savings in a retirement plan. So that is your greatest deduction. Now, unfortunately, you have to have the retirement plan in place by 12/31/23 in order to make a contribution and have it be deductible for your 2023 tax return. But this is something to keep in mind for this next year. All right. So again, it doesn't matter how small your business is, you still get to have a retirement plan. Now, retirement plans for small business owners or business owners is incredibly complicated. And so it does depend on what type of plan in terms of how much you get to deduct. But I do want to encourage you to start thinking along those lines, that retirement is really where you can save some money. Is there a checklist of items for filing business taxes for self-employed businesses? Now, one of the most frustrating responses business owners get when they ask an accountant if something is deductible is hearing the accountant say, well, it depends. And it depends on certain expenses. Some things are just not deductible. Some things are deductible across the board. For example, Stripe processing fees, that's a business expense. It doesn't depend at all. That is a true business expense that you get to deduct. I'm going to talk a lot more about processing fees in a little bit. That's a very common question I get. But there are some expenses where it does depend. And the reason it depends is because everybody's businesses are different, okay? So yes, there is a checklist of items for business taxes, and the checklist that I think is the best guide. It's very difficult to see this right now, but this is a Schedule C. Now, what's a Schedule C? A Schedule C is an IRS form. It is part of a Form 1040. Form 1040 is what you file for your personal tax return. So we all file a personal tax return. Hopefully, we are all filing a personal tax return, and that is a Form 1040. The easiest formation of your own business is a sole proprietorship. So if you are a sole proprietorship, meaning you have a license to practice and you've filed all those forms, you are a sole proprietorship where you get to collect income, and you have to file a tax return on your business, but that is filed through your personal tax return, through your Form 1040. So this Schedule C is a list of all of the potential deductions. Right here is where they have outlined several common deductions for businesses to be able to, this is where you put the forms of what is deductible. Now, the reason I'm using this as a checklist is because this is a just generic Schedule C. This has nothing to do with service organizations. This is for all businesses. So all sole proprietorships. The other people that file Schedule Cs are people who are single member LLCs. So basically, if you are not an S Corp, you're probably filing a Schedule C. If you're a partnership, that also would be something separate. So if you're a sole proprietorship or you're a single member LLC, you're going to be filing your tax return as part of your personal tax return through this Schedule C. But there are a lot of different businesses that file these Schedule Cs. So they can't just say, like, for example, here is where you put your gross income from your business. And then there's a whole section here on cost of goods sold. So cost of goods sold is usually we don't have cost of goods sold when we're in a service business, because this is more for manufacturing when we have inventory and products. So those are areas you wouldn't use. But the beauty of this, thinking of this as a checklist, is with this Schedule C from the IRS, they have all of the different explanations of what is deductible. Now, page 2 of this Schedule C is this area right here, which is other expenses. Now, I know a lot of therapists get really hung up on what category to use on their expenses, like Psychology Today. Where do I put that? Where do I put that expense here? Where do I put all the different expenses? Do I have too many in other expenses? Is that bad? And the only thing that I'm not really hung up on where you put things so much as your consistency. So if Psychology Today expense is usually, you list it with which I would do, is listed as advertising. If you put that in advertising in 2022, make sure you put it in advertising in 2023, because the IRS, it's all computer generated on, when they put in all those numbers, but they do look to see if there's huge spikes in one expense category or another. So this is somewhat of a checklist to be able to use to know if things are deductible. Now, this has nothing to do with an actual service-oriented business, so we have to get specific on. That's why I'm here, to talk about some of the deductions that we get to take as therapists. So how can I make sure? These are some of your questions that you had given me earlier. And I just combined in this one, I just combined 3 questions that were very similar. But one was, how can I make sure to count all of my expenses? I'm paranoid about claiming something I shouldn't. So that's the real quandary, right? It's the real paradox. I want to make sure I'm counting all of my expenses, but I don't want to be too aggressive so that I might trigger an audit and I might be claiming something that I really shouldn't, and then I'm going to be penalized. So I get the pain. I really do. Another way of saying that is, what is not allowed to be a tax write-off? Or what can I use as deductions other than the obvious expenses? So that question makes me think, okay, we're trying to get fancy. We're trying to maybe compare ourselves to other therapists, but we really got to stay in our own lane, right? All businesses are different. All businesses are different. All therapy practices are different. So one therapist might have rent because they see clients face to face. Another one might be able to take a home office deduction because they're 100% telehealth from their home. So we can't really make sure that we're doing things just as same as other therapist practices, because we all are practicing differently. So I just kind of summed this up is, do you suffer from FOMO, which is fear of missing out on deductions? All right, so I'm going to give you a very simple way, simple is my word today, very simple way of thinking about it. So I want you to ask yourself this question when you're considering whether or not a business expense, or you think it's a business expense, would be deductible. So let's pretend that instead of being your own business owner, you're actually a counselor as an employee of an organization, and you have this business expense. Would you file for reimbursement with your employer to be reimbursed for that business expense? If you would not, then it's most likely not a tax deduction that's legitimate as a business expense with the IRS. If there's no way you would submit that as an employee to be reimbursed for that. So for example, if you're working as a counselor of an organization and you would not submit to the organization for reimbursement your personal therapy, then your personal therapy is probably not going to be deductible as a business expense, okay? It is considered a medical expense, even though we highly recommend that you get therapy, that therapists get therapy. It's not deductible as a business expense. So that's just a general basic guide to use. Okay, how do I determine how much Stripe has charged for credit card processing for the full year? Because I get this question, that tells me that most likely you're probably not using an accounting software program, and you're probably not using your bank statements as your determination of how much your income is, your counseling income is. Because if you were using an accounting program, the accounting program is what talks to your bank statements. And your bank statements, SimplePractice, deposits a net amount. So they deposit your gross income. Like if let's say you charge $100 to meet with a client, they charge the $100 on the Stripe fee. They had, let's just say, $3 of processing fees. You get a net amount of $97 in your bank statement. So I'll answer this question as very basically. You just go into your SimplePractice account, You go into the analytics. On the next tab is reports. You go to the 2023 tax report. You download that report. I think it's available for 24 hours once you click it. And right there, it will tell you how much income you have brought it that has come in through SimplePractice, how much your expenses have been. Those expenses include both how much you paid SimplePractice as a SimplePractice customer in expenses, and also your Stripe expenses. And then there is a line item that says how much is Stripe expenses. Okay, but remember, if you do have an accounting program, or if you are using your bank statements, that Stripe credit card processing fee has already been deducted from your gross income. All right, so it depends on which numbers you're using. I just don't want you to be double counting the Stripe fees as twice of the expense. If you do not have an accounting system, then I'm going to give you a simple way to come up with how much net income you put on your tax return. So I would like you to collect all of your bank statements. We're going to use the bank statements. This is what CPAs use when when their clients have not been using any kind of formal system of collecting. Like even if they have been doing Excel spreadsheets, they still need the bank statements to do their due diligence. So you want to include all of your bank statements from for the full year 2023, because this may include some, they might have different cutoffs with the bank statements. So you want to make sure you're including the full 2023. If you have all of your income from all different sources, but hopefully everything's coming through SimplePractice, but if you have all of your counseling income going into this one checking account, then you just need this bank statement. If you pay all of your expenses through just your bank statements, through debit cards or electronic funds transfers or through checks, then you just need only those bank statements. This is one of the reasons why I recommend having, you have to have a dedicated account, but sometimes, and there are a number of different reasons for this, but like you might have a credit card. So that's another group of statements that you need to include in collecting all of your data, right? And you might have started with some insurance companies and before you had your business checking account. So you might have had the insurance companies depositing money into your personal account. So you want to make sure that you're getting income from all of the different areas. If you only have the one bank account, then it's much, much simpler. Okay, so you add up all that counseling income on those statements for the 12 months. You compare that number to your 1099s and your SimplePractice reports. So there can be timing differences. So what are timing differences? Timing differences are at the end of the year or the beginning of the year. You may have seen a client, SimplePractice is recording the income, but the money might not have actually hit your bank statement until the following year, just because maybe it's over a holiday or because it's over the weekend. So there may be a few timing differences, but we do want to be doing that reconciliation. I did this before we had our meeting today. I took all of my counseling income from SimplePractice. I produced that 2023 tax report, and I compared that with my QuickBooks data, and all of my Stripe processing fees were in there. All of my income was in there and matched. Actually, I had to do a little bit of reconciliation because there were a few timing differences, and I worked that all out. So I'm happy that I had all of my income in my QuickBooks system. Then you want to record all of your business expenses. Now, if you haven't been doing this during the year, this is a lot of work to do right now, a lot of administrative work. This is one of the reasons I really harp on having your Excel spreadsheet, if you don't have an accounting system, up to date every month. Okay, so you don't have to keep going through this. It's hard to remember what happened, who you paid on different earlier dates, right? It's hard to remember what had happened in January of last year. It's hard for me to remember what happened yesterday. Now record that the business portion of any personal expenses. So remember, if there's anything that has hit your your personal statements, whether that be income or expenses, make sure you're including that in your calculations. And then prepare your tax return to calculate the maximum contribution if you have a retirement plan. And then hopefully you do have those funds to make that retirement contribution. I've done a lot of videos on how to save for taxes in retirement. So you know, if you've seen any of my videos, that there's this magic number of 40% that I want you saving 40% every month so that we don't have any surprises at the end of the tax year. All right, so one of the questions was, what are the biggest mistakes that I see therapists doing with their taxes? I see therapists getting fancy, and I like fancy, but not when it comes to taxes, especially when people don't know exactly why they're doing what they're doing. The most common areas that I think people get in, that I've seen therapists get in trouble with, are taking the home office deductions when it really doesn't apply, or trying to do it piecemeal, becoming an LLC or an S Corp without knowing your obligations, and thinking that expenses should be deductible, that that sounds fair, or hearing from other therapists that they've been doing it that way. Even if you highly recommend various self-care strategies in your practice, so if you really encourage your clients to be joining gym memberships or having personal therapy or neuro-linguistic testing, you cannot deduct those personal expenses because you recommend them, okay? Remember, you are a business owner who cannot receive a tax benefit if you do not collect your full fee. This is one of the questions I get every single time. I have addressed, by the way, in my website, there's a page dedicated to frequently asked questions, and this is one of them. I always get this question. If I have not collected my full fee, where do I get to deduct that on the return? You do not. You only pay taxes on the income that has come in. So this is why I want you to be really careful. Have a max ceiling on how much your reduced rates and sliding scales really are that you're offering, okay? Don't take tax advice from fellow therapists. Now, it's fine to hear about their ideas and to be curious from their advice, but verify its authenticity with an expert, and hire experts to ease your administrative burden. So many times, I can't even tell you how many times I have taught people how to do certain things with their books, and they're like, okay, I know how to do it. I just really don't like to do it. And there's nothing wrong with that, because we want you concentrating on what you do best. Again, I am so protective of your peace of mind. And so let's have you not worrying about the things you should not be worrying about. How do I convert SimplePractice data over to QuickBooks? You don't need to worry about that. QuickBooks talks with your bank. So, and SimplePractice deposits money into your bank. So SimplePractice is indirectly talking with QuickBooks, because SimplePractice just deposits that money into your bank account, and QuickBooks records that SimplePractice income from your bank account. That's why I want you doing those reconciliations, because I want to make sure that everything that SimplePractice says you should have in QuickBooks is actually there. Okay. Am I able to take auto deductions? Okay, so there are two areas. My next slide is about home office deduction. Talk about simples. So we've got both auto deductions and the home office deduction. The IRS offers two different ways of calculating these deductions. One's a simplified version, and one is a very much more complicated version. With auto deductions, it's not super much more complicated, but it's still complicated. So in the spirit of simplicity today, I am going to highly recommend that if you do have the ability to take an auto or home office deduction, and that's not a given, not every therapist has that, then I highly recommend doing just the simplified version. So when do I get to take an auto deduction? An auto deduction is applicable if you incur business miles. Most therapists, and I've seen a lot of lot of very different practices in these last couple of years with therapists. Most businesses, therapy offices do not have a lot of travel. Now, I am 100%, no, sorry, I'm like 95% telehealth. But I have this side gig that I have a couple of things that I do have to do a little bit of travel. I do crisis intervention work with employers, and I do have to travel for that. But I collect those business miles. Most likely, that's what most therapy practices look like. Or you might have a rental office where you go and you primarily see clients there. There's usually not the ability to start talking about, oh, can I take an auto lease on my business? Your business use percentage of your auto is usually not very high. So what I highly recommend is that, and there are apps for doing this if it's worth it to do that. But what I usually do, because my business mileage is so little, that I just keep an Excel spreadsheet. To be fully transparent, I do not keep it during the year like I should, but I just do it at the end of the year, and I just review, because it's so limited that I review just my business miles. I do an Excel spreadsheet of how many miles I get. I take the IRS mileage deduction, which for 2023 is sad, I know this, but I had to look it up for today. 65.5 cents for every business mile that you get, and that's a simplified version. So you get to just take the business miles, 65.5 cents on every business mile. You get to deduct that on your tax return. Okay. Now, if you are working in telehealth and you have a home office, you don't have business mileage. If you live at home and then you rent a space, you are not able to include the travel from your home to your place of where you rent. That is not considered business mileage, but anytime you are traveling from your home office, whatever is your office space, whatever's either your rental property, rental space, or your home, whatever is your principal place of business, to a client's office, that is considered business mileage. Okay. So there's a lot of confusion about that, because every day I travel to my place of work, but that is not considered business mileage. The other method is more complicated. You take all of your auto expenses for the year and you multiply that by your business use percentage. But for the most part, for therapy businesses, that is not a very high percentage. All right, so if I had to pinpoint the most difficult part of a tax return for therapists, it's this home office deduction. But again, there's a simplified version and there's a not simplified version. There's a very complicated one. If you decide that, if you think that you are eligible for a home office deduction on your tax return for your business, and you want to do this more sophisticated, if you own your home and you want to do a more sophisticated calculation because you want to include depreciation, I highly recommend that you have a CPA help you with that calculation. Okay. Now I am including this form, just a vision of this form, because it's form 8829, which is expenses for the business use of your home. It is very rare that you can, it's pretty rare that you can have a home office deduction. Like I said, I'm 95% of my business, it's probably even higher than that, is right here in this office. I'm sitting at my business office. We're in my business office, and I'm sitting at the desk that I use for all of my telehealth and for this webinar today. Yet I look around me and, there's a lot of stuff around here, but none of it has to do with my business. So, and on this desk, I also pay personal bills. And the IRS is very specific to say, if you do anything that is not business related in your business portion of your home, you cannot claim that it has to be a dedicated spot. So you cannot take that deduction. There is a wonderful article, and I leave you the link here, by Bench, and they describe the 3 areas in detail that you have, the 3 tests that you have to pass in order to be able to take this deduction. It has to be exclusive. So that exclusivity means that it has to be dedicated only to all business purposes. It has to be regular. So it has to be part of your regular operations. Now, it doesn't mean you can't see people outside of your primary place of business, but you have to be doing all your admin work here. It has to be regular. It can't be like, well, once a month I see a client and on telehealth and I use this desk. It has to be regular part of the operations, and this article goes into a lot more detail, and it has to have precedence. So you can't have a home office deduction here and a regular rent space that you rent 5 days a week. You can't have that dual. It has to have precedence. This has to be your principal place of business. Okay, just to give you an idea, this is right from the IRS. You determine the amount of this is a simplified version. So you can either use a simplified method or the actual expenses method. But the simplified method is you take the square footage of that portion of your dedicated business office, or the smaller of that square footage, or 300 square feet, and you multiply that by $5. So if your business portion of your home is more than 300 square feet, you can only take $1,500. 300 square feet times $5. Again, I'm so protective of your peace of mind. I don't think it's worth it if you're not sure, to take an aggressive stance on this. Some CPAs will disagree with me on this, but there are a lot of CPAs who know that this home office deduction, because people abuse its deduction so many times or miscalculate it so many times, that it is a trigger. Like I said, some will disagree, but it's a red flag trigger for an audit. And $1,500 is just not worth risking your peace of mind. What are the benefits of not doing my own taxes? So, of course, we know the benefits are that you get to have the experts actually doing it. You're getting that peace of mind that it frees up your time, but you still do need to do all of the preparation so you can give that information to your CPA. So it's not like you're out of being able to tell them, still prepare, reports for them. But in addition to that peace of mind that an expert is taking over, one of the most common questions that I get, in addition to processing fees and whether or not you can deduct fees that you didn't collect or write those off, is about estimated tax payments. So if you have a CPA doing your taxes, they should be preparing for you estimated tax vouchers. So it's all prepared for you for the following year. So and the instructions on how to file those payment vouchers, as well as the due dates, so that you don't even have to worry about. Now, keep in mind, though, even though they're preparing those estimated tax vouchers, if you've done exceptionally well the next year, you still need to be saving for 40%, because you're just paying the estimated tax vouchers based on last year's income. All right, so you get to avoid having to worry about that stuff. Again, more peace of mind. Okay, I'm going to kind of speed it up because I know we got to get to live questions. What should I look for in a good CPA? A good CPA is a very subjective thing. I know some people who really prefer going with large firms. It's more and more difficult to go with a large firm these days, because large firms are really needing to charge large prices, and many therapists in their private practice really want some great customer service and more of that camaraderie. Okay, it would be like saying, do I go with a big box bank, or do I go with a credit union where I can get more of that support? So it's a very subjective recommendation. But what I would like to offer you is that many times in meeting with therapists, I have asked why they aren't happy with their current CPA. And I just want to recalibrate your expectations on what a CPA should be doing for you, because I think some have extreme expectations that CPAs should be providing you tax planning services as part of your tax return filing. And that is out of the scope of what they're able to do. If you have a friend who's a CPA or a family member, you know that tax season is absolutely wackadoodle. I mean, it's a marathon. It is, tremendously stressful. And so all they're concentrating on is getting those returns out by April 15th. And so they don't have the ability to do tax planning services unless that's something that you've already contracted with them about, okay? So, and also remember that a good CPA has to do their due diligence, but they are dependent on what you give them. So they're not necessarily going to be saying, hey, did you want to start talking about a retirement plan? Because you could really save a lot with your retirement plan, unless you're really have invested with them about tax savings. So in tax planning services, sorry. So they're really concentrating just getting that return out. Okay, just want to go over some of the tax filing deadlines. So our pass-through entities, which mainly just for us, just really means S corporations, have a filing deadline of March 15th. Okay, you can extend your return, your S corp return. You can extend it for 6 months. That also puts your personal return behind as well, because an S corp extension means that you can't file your personal return until your S corp return is filed. So that's also holding up your personal return. And remember that even though April 15th is also your personal filing deadline. Everybody's got to file tax returns by April 15th unless you extend them. But what you're extending is the filing of the return. You are not extending the payment of what you owe. So you already have to calculate by April 15th how much you owe the IRS to avoid any underpayment of penalties. Okay? Underpayment penalties, sorry. So if you're already calculating what you owe, wouldn't it be worth it to just do that added step? Of course, there are reasons why people extend. I get that. But wouldn't it, if you're already figuring how much you owe, just take that extra step and get that return filed. Of course, the earlier you get your information to your CPA, the more you're guaranteeing that they won't have to extend it, because if they get it in, some people have deadlines of if they don't hear by from certain date in March, but most have a deadline of sometime in April. But even then, you've got to get that to them. The earlier you get that to them, the more you're guaranteeing that they won't have to extend it. Estimated tax payments they call them quarterly estimated tax payments, but they don't go by the quarterly calendar. They're actually due on 4/15, 6/15, 9/15, and 1/15 of the following year. Okay, how do I DIY tax filing as an S corp owner? Very simply, do not do it. Do not do it. Nope. Too much. It's too complicated. If you know how to file your own S corp tax return, and you're a therapist, you need to be concentrating on therapy. It's too much liability. You have to file your own S corp return. So you have to file an 1120S that is due on March 15th. I draw the line with sometimes people, I will say, you know what, I don't think you need an accountant to work with your books. I think you're fine filing your own tax return. I draw the line if you are an S corporation. I also draw the line because you need to be in payroll, and you need to understand what that's all about. Serious penalties if you are found out not doing reasonable payroll. Okay, so don't do that on your own. How do I report income if I didn't receive a 1099 from an insurance company? I love this question because I want to make sure the cart or the horse comes first. Even if you have not received a 1099 from someone, it doesn't mean you don't have to report that on your tax return. Again, if you haven't received a 1099, like if you don't take insurance and you have private clients, they don't need to file a 1099 with you. It's just certain companies have restrictions on when they pay, when insurance companies pay you, typically that's the ones that are sending you the 1099s. When insurance companies send you a 1099, that's because they are required to, and they're filing that with the IRS. But that's because you've met certain thresholds that they had to. If you have any kind of income, if you're bringing in any income, if you see income coming into your business checking account, you've got to report that. So it's not the 1099 that's driving the cart. It's the fact that you've received income. So the 1099 is just to say, okay, they've reported that to the IRS, but any income that you have received in your business is taxable. So you have to report all of that. What tax filing software do you recommend? I don't think this is going to be a surprise to anybody, knowing that I am such a fan of QuickBooks. Full disclosure, I'm also a QuickBooks Pro advisor. So that just means that I'm on their website as one of the zillions of people who can help people with their QuickBooks files. But Intuit is the one who owns QuickBooks, and they are the ones who own TurboTax. I highly recommend TurboTax. Now TurboTax is so fancy that they have wild commercials on Super Bowl, but they also have different software packages. So you can totally DIY it with TurboTax. You can DIY it plus get support, or you can have somebody else do it for you. So there's a number of different options, but I do love TurboTax. And I also get the question often about what about free tax filing software? There are free tax filing softwares out there, but that usually means there's zero customer support. They want you to buy more things. So what's in it for them? All right. And if you're coming here, you probably need some support with tax returns. And I love that you're involved in getting this information. So let's get you more support with paying a little bit more for getting a good tax software package. All right. So before we go to live questions, this is my new and improved. I'm putting my money where my mouth is, and I hired a wonderful marketing person who revamped my my website. So now you can get an article on 8 costly mistakes private practice owners make that I wrote. You can belong to my email listing, but more importantly, you can book a consultation with me where we don't have to go back and forth on, wait, was that Eastern time? No, I can't make that date. And all the confusion that you've patiently put up with me on and the delays in getting back to you. Now I don't even have to worry about how long it's been that I've gotten back to you, that it's all taken care of and it's all done right there. I do want to just nip this in the bud, though, that just to be really clear, right now, this is like my baby. I love working with therapists, but I am not able to offer tax preparation services. So if you do need a CPA to do your tax return right now, it's not something that I'm offering. I got some wild ideas in the future about how I can work with CPAs, but right now I just can't do that. With that being said, I do also now offer, I am offering a paid webinar, and that you can all find on my website, about how to file your tax return with TurboTax. So if you wanted a little bit of an oomph of support from me, I am offering a course in that. I'm offering it on March 8th, but I have a couple of options. I could go to the people who have signed up for it and ask them if they want to make it a little bit later in March, because they're still getting their tax return information together. Or I can offer another one closer to the end of March or maybe beginning of April, because in order to really get the best benefit from this course, you really need to have all your tax return information ready so we can start plugging numbers in. All right. So I think that's, yep. All right, Ruth, take it away. Ruth or Cheyenne with the live question?
Sorry about that. Yeah, I'm on. Sorry, there was some weird delay with my internet, I think. But so the first question is from Britanella. Not sure if this has been asked already, but if I'm married, filing jointly, does that change anything about how I file my private practice taxes?
Great question. I'm assuming you are a sole proprietorship, so I'm just going to go with that assumption and that you're not an S corporation. Sole proprietorship is the most common. So it doesn't change anything about how you file with your private practice, because if you're married filing jointly, you're filing a joint personal tax return. So you're still filing that Form 1040. You would file your private practice as a Schedule C. In the Schedule C, there's a space for your employer identification number. So you want to make sure that that's your business identification number. But other than that, no, you're just filing that Schedule 3C through your personal tax return. One thing I do want to say, though, is when we are sole proprietors and we make estimated tax payments, remember, sole proprietorships and single member LLCs are filing all through your personal tax return. So when you make an estimated tax payment, you're making it on your personal IDs, so your social security number, not that Schedule C employer identification number. Let me just say that one more time. When you're filing your estimated tax payments, even though it's on your business income, it's all run through your personal tax return. So you're going to be filing it with the irs.gov, but you're going to be using your personal tax information. So that's the only change that I'm suggesting is happening when you're filing jointly. Filing jointly or filing singly, it doesn't matter. It's still that Form 1040, but you just want to make sure those estimated payments that you're making are all personally.
Okay, so the next one is coming from Marissa. For a private practice healthcare professional, do you need to share all client/insurance payments with your accountant or just give them the high-level income numbers?
So you need to share a gross figure for all income that came in your business, regardless of how small. If somebody paid you $10 to do something quick for, you offered a little incentive worksheet or something, and they paid you $10 for it, something on, that stuff happens. You include that $10. Now, what you give your accountant doesn't have to be, I saw Sally at $150. It doesn't have to be those details, but you have to include all income in that figure. So you aren't, you do want to be including all of the 1099 info. So let's just say you made, just for ease of numbers, $100,000 of gross income in your business. You can say, okay, this is my counseling income is $100,000. I also want to show you that I've received 1099s of $25,000, $35,000, and whatever you've received. But all of those 1099s are part of that $100,000 figure. So you need to tell your accountant all the income that you've earned. It's just you also want to show them, okay, I also have the 1099s. You're not counting it twice, but they should know, they should have that 1099 backup that you've received.
Okay, up next, we have a question from Kate. Can a provider who's also a member/owner receive both a K1 as a owner as well as a 1099 as a provider/therapist?
So you can have a number of different operations. If you are a K1, if you are receiving a K1, that means you're either a partner in a partnership or a group practice partnership, or you are an S corp owner. So if that's the case and that's your only operation, you would be receiving 1099s, but those 1099s would be on that S corporation or partnership, whichever one those are. That's, you get K1s from either partnerships or S corps. So let's just say S corps. So you are getting 1099s, but that's all part of that K1. You would not get both. You would not file a Schedule C and a K1 on that S corporation. I hope that made sense. But let's just say you are an S corporation, you work with insurance companies, the insurance company, let's just say Aetna sends you a 1099 that said you made $10,000 with them. On your S corporation, you will have that your gross income from Aetna was $10,000. Okay, so you will receive 1099s, but the K1 is something totally different. The 1099s, all that's doing is just saying, hey, this is how much money we've paid you. And just so you know, we've told the IRS this is how much money we've paid you.
Okay, great. Thank you so much. Yeah, I think we have time for one more. So this is from Joy. Joy says, can I write off CEUs and licensing fees if I am a W-2 employee at a group private practice?
Great question, Joy. So if you, let's just break this down. If I'm assuming you're asking that because you have your own private practice, all right? So if you're a W-2 employee and you are not getting reimbursed for those CEUs or licensing fees, but that does happen. So if you're not getting reimbursed and you need those CEUs and licenses in order to have your business on the side, then yes, you can deduct them. But if you are being reimbursed for those fees, like if you're an employee of an organization and they have part of their plan is they reimburse you for anything that you pay for, you can't double dip. You can't also deduct it on your business. But if you are not being reimbursed for that, and that's part of the requirements that you are able to have your shingle out there as a therapist, as your own business, then yes, you get to deduct it.
All right. Okay, I think we do have time for one last one. Cheyenne, if you want to pop one last one on here. Okay, yeah. So is pro bono work deductible? I do about $1,600 a year in pro bono work.
Nope. So this is a version, Kendra, of that question is of do I get to write off money that that I've offered, but I haven't been paid for? It's super admirable. Don't get me wrong. It's wonderful that you're offering this pro bono work, but that's part of the wonderfulness of it is that there's really no benefit to you in terms of you don't get to write anything off because you haven't paid any taxes on that money. Now this is all because I have yet to meet any therapist who is not a cash basis therapist. If you were an accrual basis therapist, and if you don't know the difference between those two, don't worry about it. It just means you're a cash basis therapist. But there are businesses outside of service organizations who are accrual based. Proper accounting, generally accepted accounting principles. So large companies, they have to be accrual basis. It's called GAAP, generally accepted accounting principles. But in a service oriented business, we are allowed, the IRS allows us to be cash basis taxpayers. And all that means is that we only pay taxes on the money that has come in. So the reason we want to be cash basis is we don't, if I send a client a bill for $200, if I'm an accrual basis taxpayer, I have to pay taxes on that $200, whether or not they paid me. Okay, but as a cash basis taxpayer, I'm not paying taxes on that $200 until they actually pay me $200. Because you're doing pro bono work and it's worth about $1,600, you can't get that benefit because you didn't get paid for it. You haven't paid any taxes. You only get deductions and limited deductions on things where you've actually paid taxes on that money. Okay. The best way I can describe it is, let's say that an insurance company pays me $150 every time I see a client, but my billing rate is $950. Well, do I get to deduct that difference? No, there's no way. Like, I could say whatever my billing rate was. And so, there's just, the rule is, if you weren't taxed on that money, you can't write it off.
All right. Well, thank you so much, Edie. As always, it's a pleasure. And thank you all for joining us. I hope you got something out of this. And, it's preparing you for tax season and filing your taxes coming up.